every time there's a new technology, there will be a set of nervousness, and this time is no different. But I just want to, kind of take you back. Over the last 10, 15 years, 20 years, there have been several times where people have called out for the death of the IT sector, only to realize they come out, handsomely. In this case, the adoption is much faster, and hence the disruption is definitely there. And therefore, you've seen a lot of knee jerks. The IT sector has corrected almost 20%, 21% over the last couple of weeks, which is definitely worrisome. But the way I would look at is that the traditional IT, the verticals, whether it's application development, maintenance, will go through a reset. So it's mainly a reset of the industry rather than completely calling it absolutely end of the era. But having said all of this, is that companies which will focus on reskilling, companies which will focus on working on transformation of AI and working on those deals will come out kind of pretty strongly. And there will be certain job losses. There has been there, but I just also wanted to draw your attention is that there has already been a lot of decoupling between the revenue streams and the headcounts of these companies over the past couple of years. So this only gets accentuated, which has kind of led to the fears and hence the debacle in terms of the IT stocks. But having said all of this, I think while the AI impact is the jury is still out, because the very fact, and I was listening into a couple of other comments from Arjun and then the French president and the otherwise from Microsoft, etc. One thing is very clear, that this time the adoption is much faster because we have the internet, we have the phones, and hence what we were using, let's say Copilot, we were using Chat GPT and Gemini. Now we are talking about Claude. So in just a matter of weeks, the technology is changing. So I think it's not the end of the world. The last point is that the impact of AI on IT can be understood in three terms. One is the old business, second is the new business, and third is the mix of old and new. So old business, when I say it was the efficiency or the productivity gains which are coming through, just the way you discussed about the application development and maintenance. So that will be the gains which will have to be passed on to the clients. The new revenues, which is AI-led transformational deals, which will be extremely important. And that's the mix which has to kind of go on. And with all the AI engineers and, more and more kind of people kind of upskilling, reskilling within the IT companies, that should kind of bode well going forward.
Yeah, I mean, there was so much I wanted to ask you because, I've been trying to understand this. Where do you see India's IT sector losing the revenue? Because you talked about this mix. How much of the AI-related productivity gain will offset the decrease in the revenue? And if that productivity gain doesn't happen, then how will that impact the layoff story? In that context, again, I have to ask, how critical are Q4 results of these IT services companies in India? Just lay out a picture for us.
Absolutely. No, and I think to start with the IT results, they were pretty much in line with expectations. There is definitely a fear in terms of whether there is going to be massive job losses. But as you've seen over the past couple of years also, and let me give you a parallel example. So when the BPO, the business process outsourcing, which was the heaviest pillar from an India standpoint, and when this AI and the new age technology started coming in over the past 2 years, these BPO companies, while the revenues have gone up, the valuations have come off. So they're trading at 8-9 multiples as well. So it was the fear of the narrative. So from an India earnings standpoint, or what the proportion of the IT split is. So probably 25-30% of these IT companies are into application development maintenance. And it's not, while there is definitely a fear that, some part of this is getting kind of reject and kind of will impact in terms of the job losses. We feel that the companies have also guided that they will be able to maintain the revenue stream without adding to headcount. So I think if that is the case, that's going to be one thing. And the last point is, again, just reiterating about the skilling and the reskilling. So if they're able to do that on a faster scale, the impact would be much lower.
Okay, briefly, what kind of resistance support level do you see then for the Nifty? What trends and breakout patterns are you seeing?
Sure. So I think let me start with the IT, which will give a sense of the Nifty as well. So in terms of the IT sector, they've already corrected 21% of the past couple of weeks. They're trading at maybe 5 to 6% free cash yields. We feel that this is everything at a price looks good. And I also want to say that it's never as bad as what it's made out to be, and never as good as it's made out to be. So generally, all of this put together, we feel that there will be some support the market will see. And as far as the Nifty is concerned, India has underperformed almost 30% in the last 1 year versus the emerging markets, 50% over the last 2 years. We don't see that sustaining. The FPIs have kind of sold almost over the last 5 years, close to $20 billion, whereas the domestic institutions have invested close to $220 billion. So there's a $240 billion delta. So net, we believe that, the time is right. The AI disruption may continue, but the US has come with the trade deal. Your policies are stable. Your currency now could look to be stable. So net, we feel pretty confident that India has underperformed, and now is the time to add to India.